I promise this is not another Palantir AI BS hype video, the thousandth you've seen in the past 2 weeks, but I did want to just briefly cover my history with the company, the product, as well as my investment into the company. And we'll go over some of that real quick. We'll jump into a couple metrics on it and a bit of recent news with Palantir. So if we take a look, we see year to date up 141% over the past year before some of this most recent run up. But yeah, still 72% increase. So basically, I invested into Palantir back so they went public September 30th, 2020. Um, IPO via direct listing, or excuse me, they started trading publicly via direct listing, not an IPO. They went public around 950, although that might have been pre-market. And then if you were a retail investor, you couldn't buy it below 10 by the time market opened. I forget. Regardless, I bought it either the day it went public or the day afterwards. And so the shares I bought back on the first day or two of public trading in Palantir, and I haven't really touched it ever since. I rode it up to, let's see what it got up to. Um, see, Jan 26th of that year, 2021, up to $35. February 35, almost $36. So yeah, rode it all the way up to nearly 40. I didn't trim any shares, obviously, in hindsight should have, and then have been watching it go down to $6 a share, $7 a share, and now popping back up to 15 and a half. Haven't sold, haven't bought any. My history with the company slash product, basically I work for an organization that utilizes several of Palantir's technologies and products. And the big aha moment I had personally for the stickiness of their products was that my organization, we were utilizing their products for a couple of different, let's say, niche applications and use cases. And the contract for their products was very, very expensive. The organization I worked for looked to pivot to a different product and attempted to do that with a different product offering for several months. And it was going to save millions and millions of dollars. And essentially, due to feedback across the entire organization, um, I should backtrack slightly. I think Palantir being, a tech company, fast moving, move fast and break things, they had reached out to the boss of my organization on their personal phone line. And the organization I work for, it's structured differently than a company like Palantir or these tech startups would be. And that was not really an acceptable way for them to approach trying to sell their product after my organization had decided to pivot. So after that, the boss of my organization um, decided, get their stuff out of here. I don't want it anywhere near the organization. Cancel the contract. We're moving in a different direction. Long story short, we did not end up making that move. We did end up re-upping with them, and I think that really highlights the stickiness and how quality their products are and the services that they offer are. We wanted to make the move. Well, the decision makers wanted to make the move, and we still did not because of how badly we decided we needed their products. So I think that speaks volumes. One use case, one example. It's an anecdote, right? But it really does speak volumes that all the decision makers wanted to make the move, essentially did make the move, but ended up reverting back and keeping their services, even considering how expensive they are. So having seen that, I saw the future, or at least what I thought would be the future for the stickiness of their products across many different organizations, companies, countries. Yeah. So anyway, that was my reason for buying in. As far as integration into the future with AI and cloud computing, I see where it can go. I have no idea if it's going to pan out. That's why, for me personally, I sized it what is appropriate for me and what I'm comfortable with to my portfolio. And it's about, I'd say, 3% of my overall investment portfolio, which is what I'm comfortable with. And if it goes up significantly and because it becomes a massive company and one of the next big next generation techs for the next decade, 2 decades, then great. I'm going to participate and really actually, it's going to move the needle for me, right? It's a big enough position where it'll move the needle, but it's not so big that if it goes to zero, if Microsoft, Google, Amazon, whoever, Snowflake, whatever, outcompetes them and they kind of go away or they get cut 80% from here, it's not going to ruin me. I'll move on with my life and lick my wounds and move on. Digging in, not really digging in, taking a quick look at Palantir here. So, yeah, as you know, if you've been following this company, it's shot up ridiculously over the past couple weeks. Kathy Wood and ARK ETFs, they've been buying in heavily. Does still have a short interest of 9%. The taking a look at the factor grades here, probably unsurprisingly, the significant negative is valuation, and it is extremely irrationally richly valued. You're pricing in growth that isn't even really there, if we're being honest. But still, very quality growth, high profitability, obviously high momentum. Take a look at the analysis here. And we're not going to go into each of these analyses, but if you want to know why it's such a hotly contested topic and company and stock, just look at the different analysis from people covering this. You've got, is Palantir stock too hot to handle? A look at the software company's stumbling blocks. Expensive, risky, not an AI play. Why Palantir remains my top holding. I mean, Palantir and AI, a match made in heaven. Um, so, people are all over the place with this, and I'm guessing most people are probably just kind of tired hearing about it. You see the same thing with the analyst coverage. You've got four strong buys. This is from Seeking Alpha. Four strong buys, four buys, 10 holds, three sells. Wall Street analysts, three strong buys, eight holds, two sells, three strong sells. So it's people truly all over this all over the spectrum on this one. You've got plenty of bull comments, plenty of bear comments. You do see some solid revenue growth. It's not anything, this company is not growing, at least as of right now. Maybe they'll accelerate earnings into the future as maybe their products get more AI integration or cloud integration. Maybe the commercial business takes off a little bit more for Palantir because they are so dependent on the government contracts, even still, as they try to improve their commercial business. Who knows? It is a somewhat speculative play. But there is, certainly annual revenue growth year over year. Back in 18, doing 600 mil. Last year in 22, they were doing 1.9 billion, expecting 2.2 billion in 23 and 2.6 billion in 24. So great growth, no doubt about that. It's great growth, but it's not 50, 60, 100% year over year revenue growth. I think Snowflake was doing something like that a year or two ago. I don't know if they still are. Earnings estimates in 23 were expected. These numbers are going to be a little wonky as they become profitable, but earnings EPS year over year 254% in 23 before reverting to low 20 and mid 20 year over year EPS growth in 24 and 25. Sales growing in the mid-teens to high teens to 20 year over year for the next couple of years. You see a 3-year revenue CAGR of 35%. This is one of the biggest reasons people are bullish on this company. The gross profit margins, almost 80%. If you don't know the history and backstory of Palantir, they've been developing these products and solutions for, I think, like 2 decades with some government agencies. And so now that they've built out their tools and their software and their technology, at this point, a lot of it is, obviously highly scalable product, but a lot of it's, pure profit at this point. They are spending or have spent significantly to try and build out the commercial sales team, but very nice profit margins, obviously 78, almost 79%. Take a look at the balance sheet on the surface level. Market cap, 31 billion nearly. 260 million in debt, almost 3 billion in cash. So combine a very healthy balance sheet with astronomical profit margins, and then a company that is finally becoming profitable. Yeah, it's an attractive story, right? With the hot growth avenue right now of being AI. Anything's possible, right? It almost feels like it's 2021 again with a couple things. But yeah, this was one real interesting thing on Palantir that I wanted you to see. This is looking at ownership structure. When we look at mature, very proven business models, consistent businesses, long track record of success and profitability, usually this percentage of shares outstanding, the ownership structure held by institutions, you'll see 75 on the low end, typically 80, maybe up to 85% of shares are owned by institutions. Well, with Palantir, you're looking at 33% of shares owned by institutions, 10.5% by individuals and insiders, and then over 50% owned by the public. So people like me, which makes it and gives it the association with being a meme stock, is that you've got individual investors, um, Joe Schmoes like myself, that own over half of the outstanding shares. Their share class structure is a little bit different, where their ownership, or excuse me, the people that run the company, the CEO, and the management team, they retain basically the voting shares, so they're not going to lose control of the company, even if they were to issue a whole lot of shares. But that's neither here nor there. The one piece of news I wanted to cover that was recently announced was they did just says Palantir Technologies bags a $463 million contract from U.S. Special Ops. Basically, there's a organization in the military called U.S. SOCOM, the United States Special Operation Command, and that is what they're referencing here. This $463 million contract, it's not something that's completely new. This is a continuation or a replacement of a previous one. Not that this is bad news in the least, but it was 463 million over, let's see how many years. It says multi-year. um, I forget the exact amount of years this was. It was single digits, I believe. Not that that narrows it down, but it really only added, I think it was like 20 million a year of an increase in this contract compared to the one that they already had on the books with this organization. So certainly good news, but don't get the thought in your head that this is a brand new $463 million contract that they just bagged, 80% of which is going to be profit, or it's going to be a $463 million contract annually. It's I think an extra 20 or so million a year. Nothing to scoff at, but for a $31 billion market cap, doesn't doesn't shatter any worlds here. So yeah, I think that does it. Again, I didn't want this to be another going to the moon or it's going to 100x in 10 years type of video. A little bit of backstory. Maybe you can relate, or maybe you're just trying to ride the momentum. And certainly there's something to be said for momentum and technical investing as well. But yeah, that's sort of my story with this name. And it is one of the few individual holdings I have. So thank you for watching. Hope you enjoyed the video. Take care. Let's make some money. Bye bye.